trying to figure out the correct way to trade as a beginner or novice trader is something that is extremely hard, okay? I tell people all the time, don't think that you're going to get rich overnight or within a matter of 30 days. You may get lucky, but trying to become wealthy and rich is not going to happen, in a very short period of time. You have to give yourself and pace yourself out over a period of a few months to see that you can be consistently profitable. Today, I want to share with you my trading checklist that I live by every single day when it comes to, looking at the markets. What is my go-to? When I sit down and I am looking in front of my charts during my early morning routine, what am I looking for and why am I looking at that, okay? Number one on my checklist is I'm always looking out at a higher range chart. For me, I'm trading range-based charts or range bar charts versus time tick volume. If you trade those other charts, that is fine. Market structure is extremely important. So looking out on a higher base chart is going to help put you into perspective what the overall market direction is really trying to do. You've got to understand that if the market is trending to the upside and is very bullish with momentum, you only want to be looking for trade opportunities to go long, all right? Especially if you are a supply and demand style trader, someone that is scalping the markets every single day like myself. This is what I'm looking at. I'm looking at my higher range charts. On the NASDAQ futures, I'm looking at the 120 range bar chart. And then I scale down to my lower range chart, which is a 24 range chart or bar chart to find and execute my trades on. That's number one when it comes to the checklist. Using a higher base chart to get the direction correct. Number two is on the checklist is going to be, mastering the concept of market structure. That is a very, very, very important educational component when it comes to trading. It does not matter what market, okay? Whatever asset you're going to trade, you've got to understand what that market is really doing before you start trading it and going live, okay? So number two is market structure. And what does that consist of? If we can see here, I'm using a higher range chart, right? We were very bullish to the upside here, right? And at some point, the market is going to shift and change its direction, whether it hits a round number or a half number or some pivot level is going to stop at, or if it's at an area, say this could be to the left-hand side of the chart, resistance. It may come up against a brick wall and decide to want to move back to the downside. For one, the banks and institutions need to cover ground and fill imbalances or gaps. And while they're doing that, they want to collect or create areas of liquidity and collect as much liquidity as possible. So as you can see, the market is flowing to the upside, making these higher highs and higher lows. So if we're in a bullish trend, you should only be looking for opportunities to go long, okay? All right, and I'll mark my charts up when I'm trading off of my higher base range bar chart to start with. So again, understanding the flow of the market, you need to know which way to trade. Now, number three is being able to on the checklist is really identifying where is a potential reversal could possibly happen at. That's number three on the checklist, reversals, okay? So as long as the market is pushing higher with momentum, look for the long positions, okay? And mark them up on your higher base chart to start with. Now, reversals tend to happen like this where you have, especially when the market is trading to the upside, where you have a shoulder, left shoulder, a head, and then a right shoulder, giving that head and shoulder type pattern. Now, this will be the low of a swing right here, this low right here, that I would like to see the market take out with breaking into the downside, pull back, and then break a structure going lower to let me know that we have a reversal where the market is now pushing to the downside, okay? So this will be a reversal. We've got a left shoulder, a right shoulder, a head, and then a right shoulder right here. Market comes down. There's a low. That's the head. A low, lower high, and breaking structure lower here, coming down. So this will let me know that we are moving from a bullish to a bearish pattern to the downside, okay? For how long will that trend last, we don't know. But as long as we are reversing from bullish to bearish and we're making structural breaks going lower, that's where we want to look for opportunities to go short. Like right here, we got a low, a lower high, blow it up for you a little bit, a new low, pullback right here, and then we get another structural break below this low here. Okay, so that'd be a pullback to a key area, say of supply right there to go short. All right, and as long as we're swinging to the downside going lower, you want to be looking for pullbacks to key areas of supply. If we're moving to the upside, okay, and breaking structure higher, look for your pullbacks and market charts up on your higher range at areas of demand. Now, how long will the bullish and bearish activity last? No one really knows. But as long as you get a reversal from the top to go short, take the shorts. If you get the reversal from going from the bottom where the market was very bearish and we get breaks of structure going higher, then look for opportunities to go long. And you see the low the market made here. And then we get this opening gap right here and start pushing to the upside where we're getting the structural highs and lows being taken out. Highs, higher lows, and higher highs breaking structure higher, then that means we should be looking for opportunities to go long, because now the market is pretty much reversing from a downtrend back to an uptrend as the market is breaking structure to the upside. Okay, so now we're looking for opportunities to take trades going long to the upside off of demand. All right, so like the pattern when we have the reversal from the top going to the downside, we have a left shoulder left shoulder head and then a right shoulder. When the market is moving to the downside, you're going to have the inverse of, okay? So we're flipping from going bearish back to bullish. So maybe we have a left inverse shoulder, a inverse head, and then a right inverse shoulder here going to the upside where the market is breaking structure higher. We should be knowing that now the market is reversing, okay? So that's really much, pretty much important too as part of the checklist, identifying, where we have the inverse of, or the inverse head and shoulder pattern back to the upside. That's a very critical part and can be listed. I like to check that off as on my checklist. If I see where the market is moving bearish back to bullish, part of the checklist there. Okay, now we're moving back to the upside. And as long as we're moving higher back to the upside, I can look for key pullbacks, the areas of demand to take the trade going longer off of the lower range chart. I always mark my higher range chart first, the demand or supply zones, and then move down or scale down to a lower range chart. So now that we're moving to the upside here, and we've got this bullish run to the upside, highs, higher lows, higher highs, higher lows. Moving to the upside here, this is actually a key. This could be a demand zone right here, and the market reacts off of it because it is, right? It's high probability demand zone. We had a small gap on that candle right here. I'm going to blow it up a little bit. It's a very small area. And a lot of you probably not quite understanding about, imbalances or gaps. I do uncover a lot of information-based videos surrounding, or educational videos surrounding, how I trade using the supply and demand strategy on my channel here. And I cover that in great detail. So you want to spend some time watching the video content. Towards the end of the video, I'm going to talk about those that may want to and take interest in becoming an elite or an ultra elite supporter of the channel. It's very, very inexpensive. It's only like pennies on the dollar a day, and once you see it and click on it, you'll see that the price tier is there, and it's very inexpensive, but you receive a lot of added value to really where I go into detail about the cornerstone or blueprint to how I trade. So I'll talk about that towards the end. But now that we're back in bullish mode and moving to the upside breaking structure, you should only be looking for opportunities to go long from. So we're moving higher, breaking structure, going to the upside. But then the market does what? We have this low right here, okay, where the market was making highs, higher lows, pushing higher to the upside. Then we get a pullback here and it breaks more structure going to the upside. So now we have this low right here being created as the market was making, a run to the downside right here, and it broke below the small area low right there. Turn back around and made a new high, leaving these lows right here. So if the market now, so this would be like our left shoulder again, okay? Coming from the upside back to the downside, left shoulder, head, and then coming down with a right shoulder swing to the downside. Now we have a reversal where the market is now moving lower. So once we make that shift from that reversal from the top, left shoulder, head, and then right shoulder, we can then again look for opportunities to go short. I talk about this in a market structure. I grow a video that I did for all those that are part of the elite and the ultra elite supporter group or program membership. I I did a great video covering market structure where I did use line diagrams and broke down market structure, but as well showed you on the candlestick charts or the bar charts. So you want to, if you become an elite or an ultra elite supporter, you'll have access to that video as well. Now that we're bearish coming to the downside, I'm only looking for opportunities to go short. You never want to be trading against the grain when you have identified the absolute direction of the market, okay? So get that right as well. Making that part of your checklist, knowing that whatever which way the market is really moving, if we have a reversal in the market, knowing to only trade within that direction of the market. If not, you're going to be considered counter trend trading. Now the market's making lows, pulling back, new low, pulling back. These are structure breaks below this low and these lows here, so we can look for areas of supply to go short from. Another low, lower high, breaking more structure, leaving behind more areas of supply right here. Okay, then we can go long from there. So right here you have two areas of supply. Right here, it broke structure below these right here, below this low right here. It came down, pull back, broke more structure coming down, pull back to the area of supply right there to go short off of. Then you get another break below this low right here, coming to the downside, pull back to supply. So that's what you want to look for, is that, which way is the market moving, which way is it actually trending, and identifying those reversals so you know which way you need to be trading. If it's breaking structure higher, then you're looking for demand setups. If it's breaking structure lower, you're looking for supply setups. So, and that's what each one of these arrows represent, is areas of highs and lows within the market as it's moving. Like, that's a high, the market comes down, starts to break structure lower. This is a low right here. And then we start doing what? Moving to the upside here as we're making highs, higher lows, higher highs, higher lows. As we're moving higher here, then we have a high with the market that is broken as the market, when it pulls back right here, is breaking structure higher, breaks that high right there. That's an area of demand right here. So we look for pullback to actually go long from there. So then what I would do is once I identify the area which I want to go long from or short from a higher range chart, depending on the direction of the market, we are, as you can see here, we were bearish coming to the downside here after breaking these lows here, but then we start to form a bullish channel back to the upside here, creating higher highs, higher lows to the upside, breaking above this high here. Okay, and then we have this area of demand right here, aggressive buying. So I would mark this up on my higher range chart. Okay, that's like, let's say that's number 4 on the checklist. I'll mark this up, the zone, high probability zone, and then I want to move down to my lower range chart. And this took place on October the 15th. I'll move down to that time frame there around about 9:40 or 9:50 in the morning, 9:45 on my lower range 24 chart, to look for an opportunity once the market taps into the higher range zone I have marked up, to find an opportunity on it to go long off an area of demand. So if this is the demand zone on the 120, I'll look for pullback to the zone. Okay, as we're retracing back to it on the lower range chart. Once we tap into it, then I will find opportunity at a demand area or create a demand zone to go long from there. I break this down. I'll talk about this more in detail to all those that are, especially have access to the elite or the ultra elite supporter tier. And again, I'll talk about that here in a minute, how you can gain access to it. But that's where I really break down, like I go over so many breakdowns of trades, discussing structure, discussing, zone placement, or what am I looking for as far as stop loss and profit target areas. What zones am I looking for, and why am I looking for at those zones? But the most essential part that you need to understand is, first and foremost, is getting structure correct first. Understanding that, because that's going to help you define, which way to actually look for opportunities within the market to trade from. You don't want to be trading bullish in a bearish market and vice versa, okay? So this was a great opportunity on a demand setup, market on the higher range, whatever charts you use, whether they're higher time frame, whatever they may be. Then I'll scale down to look for confluence on a lower chart to find and execute my trade to go long off of. So again, when I first come into the morning looking at my charts, I'm identifying, looking at top-down analysis from a higher point or higher bar chart perspective, and then identifying market structure, looking at the flow of the market to identify which way to trade. Once I've done that, then I start marking up my higher bar chart or range chart, I should say higher range bar chart, to mark up my levels, whether they're supply or demand, depending on which way the market is moving. Once I have that marked up, then I'll move down to my lower range chart to find opportunities to scalp off of. So if it's a demand setup I got marked on my higher range, then I'm looking for a demand setup on my lower range. And if it's a supply setup on the higher range and a supply setup on the lower range, I'll mark them off that way on both charts, the higher range and the lower range. Okay, I'm using chart confluence because confluence is important. The more that you have, like even like right here when the market came back to this area here, if you look to the right, you see we're right at a 24,900 round number as well. As it fills the gap coming back to this demand area, that's more confluence to actually go long. But it's multiple things here. You can have a higher range zone markup, a round number 24,900, a lower range zone markup. That's either on the inside of this zone, or you can wait for bullish activity where you have a new developed demand zone created once it taps into the zone to take the trade going long. So again, use as much and have as much confluence on your side to actually trade with. But this is what helps me, for anyone out there who has a small account, this is what you can do to grow your account over a period of time. But I do recommend anyone starting off to trade the micro futures to start with. And I would give myself comfortably probably 3 months, 90 days to start show some consistency and some growth on that account. All right. But that's all I have today. Was really wanting to share with you my checklist of the things I look for each and every day when I sit in front of the charts as I'm looking at what's taking place in real time as the market is moving. Okay. Now, talking about the elite and the ultra elite supporter tiers, the link is down in the description portion of the video. It's titled Ultra Elite Supporter. Once you click on that, you'll see a few tiers pop up. Give it about a second or two. You'll see the ultra elite and the the elite and then the ultra elite. You can click on them, and when you click on them, it's going to break down the perks and rewards you receive for each one of the tiers. Okay, where I go into detail. Say for example, if you want to join to become an elite supporter, you get all my trade breakdown videos where I exclusively walk you through every setup and talk about structure, stop loss placement, profit target areas, why I took the trade, as well as you get the video playlist and a great video that I covered on or around market structure. Okay, I think it's about 40-50 minute video, I believe, on that market structure. But with the trade breakdowns, I post my trades on the Discord. Okay, if you want to become a member of the Discord, the link is down in the description. You can join. And once you do, you come over to the trading floor, you'll see where I post my trades that I actually take. Then I break them down for that private community of elite and ultra elite supporters. So you can choose, if you want to become a member or not. The link is down below. But also, if you haven't taken the time to become a subscriber to the channel, please take the time to sub by clicking that button down below. Make sure to turn your post notifications on by clicking the bell. And last but not least, if you could do me the biggest favor and drop a like on the video, I greatly appreciate it. But again, this is just covering the checklist of things that I actually go through each morning prior to engaging in the market and actually trading. You've got to do your analysis, your chart markups to identify which way, and what trades you're going to take. All right. Take care. I'll see everyone in the next one.